Good day. Ira Epstein of Linn Associates with your weekend edition of your agriculture wrap-up for Friday, May 1st, 2020. Let's start off with an announcement. This will be my last agriculture video. All the others will continue. But on the ag video, I'm moving everything into my morning subscriber video where I just cover everything in ag. I mean, it's so much more than the regular stuff that we do. And for those of you that this will leave in a lurch, I'm sorry, but you can become a subscriber for $7.95 a month. So that's where we're going to be. I've added spider and ETF videos. They've taken off in a major way. So one of them has to go because of time constraints. It just takes too many hours in the afternoon. All right, so let's talk about where we're at, because the grain market's still under pressure here. And obviously the president is very disturbed with China. If it can be proven that they were the cause of the disease and didn't let the world know, and it came out of their laboratory, blah, blah, blah. Well, the president has some decisions to make, if any. The world wants to blame China. You know China's not going to pay for this. I mean, that's not going to happen. You know we're not going to pay our U.S. debt for the treasuries they bought. So the option open is tariffs. The option open to China's, do they continue to buy our goods? And it puts everything in a lurch again. So that is what you're dealing with. When we take a look at a monthly chart of closes, this gives you the bigger picture. And you can see the market is sitting here in the 840s. We've been here, done that. It's a low number, and the bias is still down since the market is under the 18-week average of closes. When I step over to the weekly bar chart, you can see how it's been a stepping ladder to the downside, and it's got lower highs, lower lows. So that keeps this market, as far as I'm concerned, still very much in the play of what? On the weekly chart, still bearish. Where's the resistance? It's right here with the 18-week average in the 100. Now, something else happened. If we come back to last week, and this was the week of the 24th, you can see that the 18-week average had just begun to cross under the 100, 883.5 versus 883.6, and it's continuing on. That's still a bearish sign for this market. So keep that in the back of your mind. What caused the bounce? Well, hitting the lower Bollinger Bands. Bollinger Bands act as your support number. Now, the market, when it gets to them, can either lay down on them, it's called riding the band, or turn away. There are tricks to be able to try to recognize what's going on, and to me, that looked as though that was going to be the case because you weren't taking momentum and continuing to push it down. The market was at an extreme. It's turned the other way. So we have to pay attention that momentum's trying to give you a bounce in this area, which is not uncommon, right? We hear all through the spring and summer how the crops are going to get killed, how weather's going to be a problem. You get those type of shocks. Okay. But still in a downtrend, and probably still aggressively so at this point. When we look at the meal market, this has been a vertical price decline. You've come right from 336.30 all the way down to this week's low of 278.80. So you've had about a $50 break in the market. You're back into an area here that should offer some support. Momentum's still pointing down, but not a trend, a vertical price break, which is very different. Off the bounce, we'll get an idea if the market's going to get what we call just a bounce. It starts running into resistance between the 18 and the 100 day. I don't know if it's going to get there, but that would be the zones of resistance I look for. In the oil, still bearish. You still have a very clean pattern of lower highs and lower lows. Change that pattern, it'll get interesting, but this week's low of 24.64 took out 24.68, so we're still making the lower high, lower low. Resistance back up at the 28.97 to 2900 zone. That should be a real problem area for the market, should it get there. This is called running the lower Bollinger Band. And it's when a market first tries to get under it and then on the bounce just keeps hitting the other side of it and doesn't get away. You've got to learn to recognize that. It's a real bearish formation. It often, and the word is often, comes out of a tube formation right here. This is the tube, as I call it. And it's when you get back and forth, you don't follow through to the upside or the downside, and then the market eventually gets a breakout of it. Now the question is the bounce on the breakout, and that's what you look for. And if it keeps doing this, that's your first recognition that you're in that running the band, and it can get rather nasty, and that's exactly what this market has done. Now eventually these markets leave that and they move over, but in the process what they've done is they've left you with the new price range of trading. So you'll break out to a downside, then you're looking at what the new top might be in the market, you play it accordingly. Right now the 360 level is an awful lot of resistance. In the wheat market, I'd look for support right here at the 510 area. It's the combination of the 100-day average lower Bollinger Band. The market's been in a downtrend. I'd be exceptionally surprised if you don't see the pros taking money off at that number. In the sugar market, this is how you start leaving that running the Bollinger Band. You see this? Now watch. You're still, I call that still running, and then you start moving to the right and you get that breakaway from it. Now momentum is down. Is the trend still down? No. This rally this week took out 1060. So you've made a trade bottom. The market has found a value area. That's the way to look at it. Is it trending? No. You've left the downtrend. You have not started an uptrend. Now the shorts that are in there and people that have maybe overstayed their hand, they go in and out and the market has to figure what to do. There could be another wave to the downside should the 18-week get under the 100-week, so that's something to watch. In the coffee, I've been looking for a retest of this area, and we're getting it. You know that on the daily reviews that I'd been doing. You've got the lower high, lower low. You're back to the 100-day momentum down. There's nothing bullish on the chart other than maybe it wants to bounce a little, but other than that, I'm still targeting the potential of 97.94. You'd have to take out 120, 120 on this formation to break the bear trend. Look for aggressive selling, I think, in the 18-day average zone. Cotton market trying to get a good bounce. Now, cotton's one of these markets that on the daily chart knocked out the downtrend, but on the weekly, it's completely kept it. It did close up for the week, though, 163 points. This is a bounce in an otherwise bearish market with resistance at 61.80. In the cattle market, you've been riding this market to the downside. Still doing it, I want to tell you that. So the longer term charts, and I know traders have been trying on the daily to get bullish, it's not here. It's still bearish. And in the hog market, well, the hog market went down, hit the Bollinger Band, got a little through it, but this wasn't riding it. This market turned right away from it. Momentum is up. The bias is up. It's not trending. You have a higher high, lower low. So I'd look for this 18-week average to be something of the resistance zone in the market up to the 100-week. The question is, what happens with all this animals? They're talking of euthanizing a major amount of hogs because there's just no facilities to take care of the amount that we have with the COVID-19. Not enough workers. There's just a lot of problems going on. Want to remind you that the way to keep up with what I do is so simple. You know, there's just not a lot of agriculture videos out there. I'm sure you realize that. So you come in with us. And in the mornings, around 5:40 in the morning, because I know the ag community is very early to begin with, and I record your ag, well, actually my morning subscriber video covers 40 futures charts. I cover all the softs. I cover just what you're looking at here in detail, saying buy here, sell there, bring up if there's been any major reports, pig crop reports, cattle on feed. It's all covered there, along with information on all the soft commodities and what's going on. As I said, you're going to get a touch of fundamentals. I'm going to offer specific points of entry and exit for you in the market. And it just might be that thing to get your day going in the futures as you work on. These are the areas we cover. There's a slide bar that you move on the website and it tells you the exact area you're in, so you can just go to the meats if you want, or the softs, or whatever you'd want to go to. So how do you get this? It's really simple, folks. Just go to our website at www.iraepstein.com. Under the word research, you'll see that drop down, and that's where you can sign up and do everything you need. All the questions are answered for you there. I've had a ball doing these ag videos, but I want to devote myself more to the financials right now. That's where the interest is with these crazy markets, and time is an element. We'll see if we ever come back with these. But in the meantime, I'm Ira Epstein. Good luck, good trading to you.